Hey everybody, this is John. Welcome to the free video. Let's take a look at the markets. A lot of questions right now. Oh my gosh, the markets, are they extended? Do we short them here? So we spent, a couple of weeks consolidating. We're breaking out. If you look at the weekly chart, a squeeze is full on. Squeezes typically last 8 to 10 bars. That's 8 to 10 weeks, and we're only 3 weeks in. Okay, and if we step back and we look at the monthly chart, you can see that this squeeze on the monthly chart hasn't even fired yet. Okay, so I think what's happening right now, or at least what I'm seeing, is that the market is pricing in expected economic strength based on reforms that are coming down the pipeline. Whether they happen or not, the market's just anticipating it and pricing it in. Okay, markets are very efficient about pricing things in 6 months from now, i.e., by the time it's obvious to everyone, it's already priced in. So anybody who's buying at that point, it's just too late. So the biggest question I'm getting right now is this too far, too fast? What's happening? And it's kind of a freight train that has left the building. You buy pullbacks until it stops working. So what are some things here that I like? One trade that I like in particular is ULTA. This is a stock that it's got a weekly squeeze, it's got a daily squeeze, a little bit lower volume stock, but it's kind of impervious to the markets. It kind of does its own thing. And on this one, we are looking for a move to $281. That's still 9 points away. So how I've structured this is it still has negative theta, but not much, 34 bucks. But I bought the calls instead of doing a call debit spread simply because it's 23 days out, and I like that there's squeezes here. But now you can see these options that are $9.30 or $13.20. If I was doing this now, I would do it as a debit spread. And what I was looking at doing is essentially even selling, that target is 280, is selling some of those 280 calls against this. Okay, and then the put spread, that's helping us with our theta. Obviously, if this goes up to 281, this will continue to deteriorate. So a lot of people are asking today, it's like, hey, is this something, is it too late to get in? I still like it, although if I was going to do it now, I wouldn't buy a straight call. I would do a call debit spread, like the 265, 275, or even the 270, 280. All right, and I'm doing 23 days out. I don't want time to be against me on this one. Another one I continue to like here is SHOP. This is just one where you've got a weekly squeeze. It's hard to borrow, i.e. there's some short interest there. But it's also, it's got this great consolidation. And I just like the action on this. And, of course, there's a weekly squeeze. Okay, again, 8 to 10 weeks of potentially higher prices. So on this one, we've got some in-the-money calls and some out-of-the-money calls. And normally I don't like buying out-of-the-money calls for obvious reasons. But for this one, went 86 days out. Okay, and 86 days out is kind of interesting because, the idea here is that if we have, the expected move 86 days out is 10 bucks. But when you have squeezes like that, sometimes you can get the expected move instead of in, 86 days. It happens like in 2 weeks. And when it happens, those out-of-the-money calls just explode. So that's why I've got a little bit more risk there. As we start to get a little bit of cushion, what I'd like to do is start selling off these in-the-money calls to help finance these, and then, of course, start selling premium against it. So what makes me comfortable about these trades with ULTA and SHOP? There's a couple different tools that I like. This one is a correlation tool. At this point for ULTA, the correlation is actually right in the middle. So it's just telling me that ULTA is in the middle of the pack. And so I'm not expecting anything crazy. I'm expecting it to essentially achieve its expected move just in a quicker amount of time. Okay. However, what gives me some confidence in it here is that there's power behind the squeeze. Okay. And what this indicator indicates is that it's with the red that it's ramping up and ready to go. And when you see green after, it says, hey, look, there's some power behind this. This thing's really going to go. Okay, and that is the part to me that's exciting. And you can see the same thing here on the weekly chart of SHOP. You've got power that built up here, and this power is being released. Okay, we can compare this. So, when a squeeze doesn't have power, it actually typically doesn't work out very well, and we can compare that. Oh, but the other thing I like on SHOP as well is you'll notice while ULTA, in terms of correlations, it was normal. the SHOP correlation compared to everything else is actually way above everything else. That just means that this particular stock is hands down stronger than anything else out there and is marching to the beat of its own drum. It's kind of a way to identify honey badgers as well. And so when you have that combined with a squeeze, combined with power behind a squeeze, it is a very, very unique combination. So here's an example of how I use this. So if you look at the squeeze right here, so here's a squeeze setting up, right? It's like, okay, we got some power, but then as soon as it triggers, the power dries up, like there's nothing there. Okay, and that's telling you right then and there that this squeeze is done. And you can see, in fact, when this thing fires, it actually just bottoms out. And especially if you're doing directional options and you see that the power's run out, you just get out. Okay, it's so much easier. And then compare that to the 15-minute squeeze that fired yesterday in Facebook, where the power just increased. And you can see the incredible move that Facebook had. And today it was up like 2 points, and it showed that there was power behind that squeeze, and that's the differentiator. Now, for those of you that are interested in learning more about the indicators, just how they work and stuff like that too, I'm going to be doing a free webinar coming up on Tuesday, January 31st. That'll be at 6 o'clock Central Time. And I'm going to talk about specific setups that I like using these indicators, how I've been using these indicators to avoid trades, like sometimes the best trades are the ones that you don't make, but more importantly, how to use these indicators to spot honey badger type trades and to know when to make a little bit bigger bet or to know when to sit on your hands and let it run. Okay, and these have been fantastic. So we'll be talking about the sector spy, the credit sniper, and the launchpad indicator. That's the power indicator there behind that squeeze. And again, this is a free indicator, slippertrading.com/spy tech. And you can just click this button here and claim your spot. The webinar does have a capacity limit. This one's going to be, I think this is going to be pretty interesting. As I've been showing people this, they're just like, oh my gosh, thank you. This has been helping a lot, which is of course the whole point. Okay, you guys have a fantastic evening, and looking forward to seeing you on the webinar next Tuesday.